A new report by Lloyds, partnered by Carpenter and CyberCube, looks at future cyber risks. It looks particularly at physical cyber in relation to the industrial sector. I'm Yvette Essen for CyberCube, and I'm joined by Kirsten Mitchell-Wallace. She's Head of Portfolio Risk Management at Lloyds. From Guy Carpenter is Siobhan O'Brien. Siobhan is leader of Guy Carpenter's Cyber Centre of Excellence for International and Global Specialties. And from CyberCube is John Anderson, Principal Client Product Advisor. Kirsten, I'd like to start with you. Could you perhaps explain to me the rationale for Lloyds putting out such a report?
Sure. So for Lloyds, it's really important that we keep up to date with the changing cyber risk landscape. And although most events up until now have been more IT events, we're now seeing increasing sophistication from threat actors and lots of increasing automation. So for those reasons, we thought it would be really good to do a report focusing on operational technology and looking at, in particular, at ICS.
John, the report that we published with Lloyds and Guy Carpenter does have a lot of acronyms. We've got IT, we've got OT, we've got IoT. Can you briefly summarise what are all these terms? What do they actually mean and how are they relevant?
Certainly. So to quickly define, IT or information technology is really the hardware and software built to store, retrieve, and manipulate data. OT or operational technology is really the hardware and software built to detect and monitor as well as control physical equipment, assets, and so forth. Really think of these as robotics. And IoT, or the Internet of Things, we're really talking about networks of devices and machines, things that are embedded within a setting and connected to the Internet.
John, thanks for that definition. Why are they relevant to this report?
Yes. So to put this all into context, the report is really seeking to build out these pathways that an industrial company can be impacted by a cyber physical event. To do this, we realized that our research should focus on the implications of industrial control systems, which are really these systems that are controlling the various processes found within that setting, such as the robotics. The robotics are really what can lead to the physical damage, and the robotics are really that operational technology and have been historically cut off from other processes and the internet. What we find, however, is that there's been a marked shift from this, and these OT systems are no longer being so siloed and are becoming more prevalent in this IoT landscape and networks as they're connecting more and more to the internet, as well as more to IT systems, and are in turn becoming more exposed.
John, could you perhaps briefly summarize the scenarios that are outlined in the research?
Yes. So earlier we heard Kirsten talking about this framework of the various factors that need to be considered and the pathways that could be built flowing from attacker to origin to end impact. And from this framework, we're able to really focus on three plausible scenarios that are really most relevant to the peril at hand. The first of which is a targeted supply chain attack in which malicious actors are able to breach a device at a manufacturer and compromise that manufacturer's products before distribution. The second is a targeted IoT vulnerability attack in which attackers are able to exploit a vulnerability in widely used IoT devices found in industrial settings. And then the third pathway that we outline is really, and scenario, is really the infiltration of an industrial IT information technology network to cross that operational technology air gap. In each of these scenarios, it's determined that the sophistication required to carry these out most likely needs to come from a nation state or nation state affiliated actor. Additionally, each of these in turn would be able to achieve that end goal of the physical impact, right? Crossing that cyber physical divide, whether that be property damage or loss of life.
Yvonne, could you perhaps comment on some of the impacts that such a scenario would have on the insurance industry? Perhaps there are particular lines of business that might be impacted.
Sure, thanks for that. So in our research for this report, we've considered the potentially material impact of an industrial control system scenario on the wide range of insurance classes beyond just a standalone cyber market. So when we look at an ICS scenario, it wouldn't be unusual to see costs arising from material damage. So, for example, property destruction, loss of life or bodily injury, or non-material damage, such as business interruption or contingent business interruption, loss of shareholder value, loss of data, bricking of machines, or ransoms. So as you know, dedicated cyber insurance looks to ensure the confidentiality, integrity, or availability of data, but it doesn't typically include cyber physical damage. The property market covers physical damage to property, but typically excludes loss of data. And as I noted, there's a number of other losses that may go beyond just damage to property or loss of data. So looking at the scenario and subject to the specifics of the scenario and indeed the individual insurance policies, we could expect to see payments under a number of insurance policies, including property, obviously, D&O for the shareholder value. And we have seen this most recently on the SolarWinds loss. They had a securities class action filed very soon after the cyber incident that they had incurred. We'll also see claims under accident and health, general liability, professional liability, kidnap and ransom, and of course, the affirmative cyber policy. So for companies managing to these exposures and indeed trying to recover from a cyber attack, there are many facets to consider and many insurance coverages to align. And for insurers and reinsurers, they should be considering the potential of making payment under more than one class of insurance from a single cyber attack.
The report touches on silent cyber as well. Siobhan, could you talk to me a little bit about that? What should insurers be doing? Are there any clauses or exclusions that they should be looking to incorporate in policies to help solve that situation, that problem?
Sure. Thanks for that. So in the past, insurance policies were in danger of being triggered by cyber-related incidents with no clarity of the intent of those coverages. There were no explicit exclusions, no implicit coverage grants, or perhaps the language was just simply very ambiguous. We saw examples of this in NotPetya and WannaCry during 2017. And so Lloyds and global regulators have become more aligned in their goal to safeguard the sustainability of the insurance market and to provide contract certainty for clients. A lack of consistency around its cyber definition and the potential impact on numerous lines of coverages presents many challenges to insurers and reinsurers. However, in response to the Lloyds mandates issued throughout 2019 and 2020, the Lloyds Market Association, the LMA, has produced various clauses to facilitate this clarity of intent under insurance and reinsurance policies. So whilst it remains early days in the casualty lines, the property direct and reinsurance markets have been deploying these clauses over the past few months. So there's 4 options available to address the potential exposure: an affirmative grant of coverage, as we've seen under some D&O and crime type policies, an affirmative grant of coverage but with a sublimit, an absolute exclusion where there is no cyber coverage given under this policy, and an exclusion but with write-backs for specific perils. And we've seen this sort of language deployed quite recently on the property insurance and reinsurance renewals. So these clauses will all help with the eradication of silent cyber under policies, and indeed they may also have a positive impact on the results of insurers and reinsurers as they look at the scenario that we're examining under this report.
Kirsten, that report is now available publicly on Lloyds.com. How would you suggest that syndicates use these findings from that report?
There were a few things that really stuck out for me. The first of those was the use of pathway schematics. This is a really helpful way to think about cyber scenarios, and the report gives 5 different steps from origin through to impact, and using those can help build really credible cyber scenarios. The second thing is looking at this risk in the context of your own portfolio. So there were specific areas and industries which the report highlights as being at risk. These were manufacturing, transportation, shipping, and energy. And if you've got a lot of exposure in these industries, you might want to consider this as a specific scenario for your book. Finally, the report has lots of reference to precedents in it. And any good scenario, when building it, you have to think about the precedents. So I think that's a very helpful aspect of the report.
A copy of that report, The Emerging Cyber Threat to Industrial Control Systems, can be found on Lloyds.com. For CyberCube, I'm Yvette Essen.